morning, everyone. I hope I'm audible.
Yes,
Please,
you
can
are.
we confirm if you can hear me? Yes. Good morning to everyone. I would like to welcome you all to the platform on behalf of the Director General of Nigeria Employers Consultative Association, Mr. Adewale Smart Oyerinde. He sends his regards. He would very much have wanted to be here because the issue of MSMEs is very dear to him, is very dear to NECA. For those of you who are not aware of who we are as an organization, we are the umbrella body for private sector employers in Nigeria, and we simply represent the interests of the private sector. So no matter the sector that you play in, whether it's in manufacturing, whether it's in service, whether it's in trade, you are all welcome under the umbrella body of NECA. And one of the activities that we carry out is this program, our knowledge sharing sessions, where we x-ray different policies instituted by government and bring to their experts that will educate us on them and then give us insights and, of course, show us the way forward. It's also a platform for you to make clarification on areas where you are not clear, so that at the end of the day, we have compliance and productive organizations. We have two very erudite speakers here with us today. Dr. Olumuyiwa Adebayo, and my colleague will be reading out his qualifications later, but they are very, very heavy, and I'm sure that by the time he speaks to his profile, you will appreciate the expertise that we have in the house. You are welcome, Dr. Olumuyiwa Adebayo. We also have Mr. Adeyemi Adediran from Anderson. He's also an erudite scholar and a very, very great expert in the field of tax. Even knowing the company that he works for, you will appreciate that these two resource persons that we have today will be bringing to bear a lot of knowledge to us and also answering our questions. We would like you to take from this event issues, nuggets that you can apply to your business, that you can apply to the workplace, so that at the end of the day, you are able to record high productivity and the issue of non-compliance will be less. Tax issues are issues that are on the very front burner right now. The tax reforms are on everybody's lips, and we know that there is going to be a public hearing on these tax reforms starting from tomorrow to the end of this week. So I invite you to please listen, participate actively, and at the end of the day, ensure that you implement the nuggets that you learn in your operations. Thank you very much, and I'll hand over back to Tochukwu. Thank you for listening.
Thank you, Madam, for your succinct but comprehensive and elaborate remark. I think you've successfully and significantly set the tune of this session this morning. And with that, I would want to inform participants that we're beginning with the first topic of today, which is understanding the contemporary tax system, benefits and obligations for MSMEs. And this subject justice will be done to this subject by Dr. Muyiwa Adebayo, the General Manager, Group Finance Sahara, and Chairperson, Committee of Finance Experts of the Nigerian Employers Consultative Association. Of course, the profile of Dr. Olumuyiwa Adebayo is quite litany, but I will begin by saying that Dr. Olumuyiwa Adebayo, a luminary in the finance sector, wields a remarkable array of expertise spanning financial reporting, risk management, taxation, and adherence to international financial norms. His academic portfolio boasts a diverse education, from a higher national diploma in business administration and management at Yaba College of Technology to a bachelor's degree in actuarial science with honors from the University of Lagos, complemented by an MBA from the University of Cambria, United Kingdom. Further enriching his knowledge base are a postgraduate advanced diploma in transfer pricing from Middlesex University, United Kingdom, and a postgraduate program in data science and business analytics and artificial intelligence and machines through deep learning, both from the University of Texas at Austin, and a certificate course on blockchain technology from the University of Cape Town, South Africa. Dr. Adebayo's professional standing is augmented by internationally recognized certifications such as the CFA Charter and the Financial Risk Manager accreditation from GARP USA. His stature is further elevated by fellowships in prestigious Nigerian institutes, including ICANN, CITN, and the Institute of Credit Administration, alongside professional accountancy designations of CGMA and ACMA from the AICPA and CIMA, respectively. His expertise is globally acknowledged, evidenced by a diploma in international financial reporting from ACCA UK and an advanced diploma in management accounting from CIMA UK. He's also distinguished by the fellowship of the Institute of Management Certified Management Consultant, CMC title. Dr. Olumiwa Adebayo holds a doctorate degree in finance. And with this, I'm pleased to call on Dr. Olumiwa Adebayo to do justice and share his perspective on the subject. You're welcome, sir.
Okay, thank you very much. Good morning to you and good morning all. I believe at this point, I can be able to share my slides. Thank you very much. Okay, good morning to participants, and I believe I'm talking to the real owners of businesses in Nigeria, given that the micro, the small, and the medium enterprises are the bedrock of our economy, and we have to give honor to those who honor is due to. I remain my humble self, and today I'll be having interaction, a very short interaction, but fruitful interaction with respect to understanding the contemporary tax system, where we'll be diagnosing the benefits and the obligation for the micro, small, and medium enterprises in Nigeria. Okay, and in this less than 40 minutes engagement, I will be looking at evolution of Nigerian tax system and the role of MSMEs. I will also be looking at key tax provisions affecting MSMEs in the Nigerian Tax Bill 2024. We also try to glance through the obligation that is bestowed on the MSMEs based on both the current and the new tax regime that is on track. Okay, we also value the benefits of tax compliance to businesses, and we'll try to look at practical strategies that MSMEs can use to optimize their tax position. We'll try and look at hypothetical scenario that tends to depict the benefit of compliance to tax provisions and tax regulations. And we also address common MSME concerns and some aspect of misconceptions. Likewise, we'll make some recommendation and ask ourselves what's the way forward. Thereafter, we'll conclude, and probably at the interactive session, we'll have a time to answer questions or to engage further. On this premise, I'd just like to let us understand the overview of taxation in Nigeria. Okay, as you are aware, tax is the backbone of government revenue. Okay, we expect government in Nigeria to carry out a lot of activities because, as you are aware, by the provision of the Constitution, the welfare, security, safety of every Nigerian reside with the government. And in doing so, the government will require revenue to carry out this function. Okay, and to do that, government need to generate revenue majorly from tax. Okay, because from all sources of government revenue, tax is the only one that predicts today from when, as far as we can remember, even during the period of Christ. And it is what is much more sustainable that we expect to continue to see as a stable source of income or revenue to the government other than other sources. Okay, Nigeria is privileged to be oil-rich country, and therefore oil revenue equally supplement that. Okay, and also, apart from being revenue, we are also aware that tax is also a critical economic tool for creating wealth, for rejuvenating the economy, for fostering development, for wealth redistribution, for promoting businesses, and the like. Okay, all of these things are what we need to understand from the bedrock of taxation in general. Now, we then need to understand that there are importance to why businesses, and in this case, micro, small, medium enterprises need to comply with tax provisions. Okay, even though bulk of businesses that are categorized as medium sized, small sized, or micro sized enterprises are usually in the informal sector, and therefore it's much more easy for them to escape the tax net. But again, there's a cost to that. And these are things that we are going to unveil, which means there's nothing that can serve as a surrogate than complying to tax. But again, we also have our concern. What has the tax revenue been used for by the government? Has it been used to our own benefits? How judiciously has it been used? Why will I still pay taxes when I still need to provide myself security? I need to provide myself electricity. I need to provide myself means of transportation and the like. But again, we'll try to understand why we still need to do our own, and at that point, we can hold government responsible and accountable. Okay, in this slide, MSE are considered, as you all know, the lifeline, the lifeblood of Nigerian economy and of any economy of this world, because they are the center points of the value chain of any economy. Thereby, they contribute significantly to gross domestic product. They are the biggest employer of labor. They also foster form of innovation, creativity, and the like. And therefore, it's expected that proper tax compliance of this form of businesses will more or less enable our economy to experience a sustainable growth and development. Furthermore, we then need to emphasize the impact of tax policies on business sustainability. And as we all know, there are various policies of government that are integral to rejuvenating and more or less growing the economy. And one of it is fiscal policies, okay, in which tax is a component, okay? Other policies are like trade policies, and we also have monetary policies. But in this case, we'll center point on fiscal policies where tax resides. We expect that government need to carry out strategic reform, which they are currently doing. As has been said at the opening of this session, the committee, the House, is more or less having a public hearing, which started yesterday. The Senate is having a public hearing on the 4 bills yesterday and today, while the House of Representatives will be having on Wednesday till Friday. And the essence of all of this is to ensure that these fiscal and tax policies as they come into fusion, they try to provide ease of doing business. They try to more or less provide incentives that make Nigeria an investment destination. And they also aid Nigerians to effectively compete with other businesses around the globe. Okay, and all of these are what we also expect from government, which means it's not enough for government to expect us to meet our civic responsibility as micro, nano, small, and medium enterprises, but also government have its own responsibility of providing framework, policies, and enabling environment. Now, let's just look for short the evolution of Nigerian tax system and what role MSME have to play. Now, historically, we are aware from the days of colonial, and I think there are about two from history, civil unrest that emanated from tax activities or tax regime during the pre-colonial and colonial era. Okay, but up to today, there have been a series of reforms that have evolved. But again, the beauty of it is that at every point of the reform, we learn from our past mistakes, and we believe that continuously, as we get it right, it's become better for all businesses, most especially for the MSMEs. Also, what place does the MSME has in the Nigerian economic structure? As you are aware, we have hundreds of thousands of SMEs that are the engine room of businesses, of the economy. Likewise, we have millions of nano, micro businesses that are equally center point of our survival today. And therefore, we have no choice other than to embrace this center point through providing job opportunity if they have an enabling environment. They also provide avenue for innovative ideas, no matter at the small scale they are. And therefore, all of these are more or less critical and center point to our development. But all of this also come with their own challenges. Okay, part of the challenges are what we will also be discussing, and which also is part of the reform that is ongoing. One of them is the complexities that we have experienced in the immediate past in our tax laws, and also a lot of overregulation, series of undue and avoidable compliance burdens. All of these are central points or challenges that make people to go informal or go under the world. Apart from that, one of it that is much more essential is the multiplicity of taxes in Nigeria, most especially along the tiers of government. You'll find that situation where local government taxes, levies are ranging towards 20, 30, 40. And likewise, state government ranging up to 10, federal government ranging up to 8. At the end of the day, we have 60 or more taxes in one way or the other. And all of these things become burdensome to businesses. But luckily today, with the proposed tax bills, we expect that at least, if not more than half of the problem will have been solved. Okay? Another challenge that MSME face in the whole conundrum is the limited access to professionals. Okay? Accountants in terms of record keeping, tax professionals in terms of advisory or helping them to file appropriately. Apart from that, also the role of technology is equally a key factor in that regime. Now, let us now look at where we are today, okay? And again, I believe the second speaker will be extensively delving much more into the new tax bill or the proposed tax bill and what is in it for SMEs. Now, in brief, I'll just talk about 6 of them. Okay, now the key provision that may affect MSME in the Nigerian Tax Bill 2024 include the aspect of corporate income tax. Okay, which means as a follow-up to what we have seen in the Finance Act, the only slight difference here is that as of today, instead of 25 million, it's more or less going to tilt towards 50 million, where any business that more or less have turnover or revenue that is not in excess of 50 million will be subject to company income tax at 0%, which means invariably you will not be paying tax on whatever profit you've made. Okay, and likewise, we'll also look at issues that borders on rates and some other things, which we are going to see later. We also look at threshold for VAT. Okay, also similarly, the 50 million, if it's adopted by the National Assembly, will also be used as an increased threshold such that businesses that have turnover below 50 million will be considered small businesses or small company, as the case may be, and they will not have the burden of charging VAT or more or less making returns for VAT. And likewise, issue of various exemptions for some goods that are center points within the small, medium enterprise are equally exempted from VAT. Another aspect is personal income tax. Therefore, there may not be escaping routes for owners of small, medium enterprises, okay? Because most of the businesses that fall under MSME are usually enterprise, which means they are registered business name, okay? And in that situation, they are not the business, have the responsibility to be subjected to income tax, which means it is the owners of the business in which the profit of that business will be taxed in its name. And therefore, it is now paramount that owners of business must file personal income tax return. And the beauty of it also is that the threshold that has been created is such that any profit you make, which form part of your income as owner of business, will be subjected to tax at a new graduated table. But again, provided you don't earn more than certain threshold, you will be subject to tax effectively at a lower rate. But after certain threshold, you may be subjected at a very high rate. Okay, but again, since you speak to small businesses, therefore, most times you might not be able to even get to that threshold. And also, small businesses are not exempted, which is one of the misconceptions that, okay, probably small businesses are not supposed to be subject to the same regulation for taxes. For example, payee. Every small business also has responsibility to deduct pay as you earn tax, which is like a surrogate tax for personal income tax of the employees, which means anyone that works for you and earn above the threshold that has been set, which is within the minimum wage range, such persons are to be subject to tax, and payee have to be deducted by you, being the employer, and you remit such payee to the relevant state internal revenue service. And when you reside in Abuja, or your business is in Abuja, or the employees are in Abuja, you remit same to the FCT IRS. Okay. Also, when it comes to tax incentives, this is another benefit that is coming in for small businesses, especially those that falls under innovative or technological space where they might invest in research and development. Okay. And likewise, some sectors have been given priority where a lot of incentives, credits, rebates are given to them, or exemptions. Okay, such sector includes agriculture, includes manufacturing, and also renewable energy, most especially those involved in solar energy. Okay, now let's now center point on this. What obligation do small, micro, medium enterprises have? Okay, the obligation you have is just to ensure at all times you comply with the provision of the relevant tax laws, okay? And you don't only comply by letter of the law, you are also expected to comply by the spirit and the principle behind the law, okay? As we have said earlier, what is the benefit of complying? What is the benefit to the country is that it provides government with revenue to do what government needs to do, and it also allows government to use it as a medium to rejuvenate the economy towards the benefit of all of us as a whole. Now, what obligation do you have? One, you have the obligation first to report yourself to the relevant tax authority, okay, for the sole purpose of registry for tax. Now, if you are a business that is not registered as a limited liability company, therefore, your first point of call is to register with the state internal revenue service. And you need to have either your tax identification number or what they can call corporate tax ID, as the case may be. And therefore, it's for you to register your presence. Okay, the essence of this is that, one, as a business owner, your business will have to also serve as unpaid agent of government to deduct withholding tax where applicable and remit it to the State Internal Revenue Service if you are doing business with other individuals like you. Okay. Also, if you have employees, you're expected to deduct pay as you earn tax and also remit on behalf of this employee to the State Internal Revenue Service. Also, you pay some other levies. All of this will be done based on your tax ID. Okay. But again, you also register with FRS provided you fall under the threshold where you have to charge VAT, which means if you have to charge VAT just because your turnover is above 25 million currently and maybe 50 million once the law is passed, therefore you must also register with the Federal Inland Revenue Service for you to have a VAT number, and that will allow you to charge VAT and also remit VAT to the post of the FRS, as the case may be. The second thing you have is to keep your records, okay? And your record keeping is your accounting obligation. And when I say accounting obligation, it's just about your stewardship to yourself and to other stakeholders. Who are the other stakeholders? Government is a stakeholder in every affairs of individual and businesses. And therefore, you need to keep record so that it's that record that speaks for you at every point in time for government to know your level of activity, which contribute to economic statistics of the Nigeria Bureau of Statistics, the National Bureau of Statistics, and it also contributes to evidence for government to ascertain your true position of what you might have rendered as return and pay as your taxes. Therefore, you need to more or less keep proper documentation of all your business activities, how you generate revenue, your invoices, your expense, your voucher, your receipts, your bank statements, and all sorts of things that more or less revolve around your financial transactions. Okay, all of these are critical and essential, all because taxation is represented by the provision of the law. And one thing about the law is that it's evidence-based. And bulk of the evidence you provide are documentary evidence, and therefore it's essential. The beauty of it today is that we now have technology playing a critical role. And if you are familiar, and that's why I would say if you have accountant or those that you outsource the accounting function to and your tax advisor, they can even recommend cloud applications where you can pay as low as 10,000, 5,000 naira or more to have access to digital service where all your documents are there. You can issue receipts online without using paper or printing out and all sorts of things. We have a lot of platforms like that. If you go on Google, you have Invoice platform, you have Zero platform, you have a lot of digital platforms that you can leverage in that regard. Another thing then is that after your record keeping, you prepare your account, you know your profit, you subject yourself to tax where applicable. The next thing you have to do is to render return to tax authority by filing your account, file your tax computation, file the amount that is due, and make payment for it within the deadline. And all of this entails if you are subject to company income tax, if you are subject to value-added tax, if you are subject to PE returns, if you are subject to withholding tax, if you are subject to your own personal income tax as the owner of a business. And likewise, the consequence of non-compliance is an obligation which everybody tends to avoid, okay? Because once you fail to comply, you run the risk of tax audit. You run the risk of penalty and fines. You run the risk of reputational damages, legal actions, and sometimes in extreme and crude manner, they can lock up your business and some things other than that. And therefore, but nobody wants any due interruption to his business sustainability. Okay, now we are aware of 4 bills in which we are discussing over time. And one of them is the Nigerian tax bill, which is a fundamental bill to all businesses, while the other 3 are much more administrative in nature. The second one is Nigerian tax administration bill. Okay, the other one talks about the Nigerian Revenue Service Establishment Bill, which will repeal the bill that establishes FRS as a whole. And the fourth one borders on the Joint Revenue Board Establishment Bill. But the question then is, what benefits does tax compliance bring to micro, small, medium enterprises? The first thing is that in today's world, government is reeling out a lot of incentive, grants, and opportunities for business to grow and thrive. And therefore, most of these, you can't have access to it if you are not tax compliant. And that's why sometimes government will say, for you to qualify for this funding, for this program and the like, you must come with your evidence of tax client certificate. And if you are not complying or you are not compliant, you can't have access to tax client certificate. Also, in this regard, it improved business credibility and access to foreign to finances in this case. Now, if you need short-term finance and you approach a bank, let's say microfinance bank, or you approach angel investors or some other investors, even corporate investors, before they can deal with you, they need your record. And part of your record is your account. Part of your record is your tax compliance certificate and some other things. That part of the record is also to even show your history of compliance with fiscal regime policies and the likes. Also, we talked about the aspect of ease of doing business and market competitiveness. Okay, compliance allows companies to reduce friction with regulators. Therefore, there will be little or no regulatory interference, disruption, and other things in your affairs. And also, it enhances your reputation, because as you go on in business, your reputation also put value on your table. And finally, it protects you from regulatory sanctions, okay, on avoidable penalties. It provides, it prevents you from dispute with tax authority, it's litigations and the like. And once you're able to do that, you are home and clear. Okay, now let's now look at current and proposed tax regimes. Okay, I'll just look at it in a glance, because the next speaker will look at it from a bigger perspective. Now, for corporate income tax, I'm just trying to compare where we are today, which is our current tax laws, and where we will be tomorrow, all other things being equal. Today is 0% CIT for small businesses that have turnover below 25 million, but in the immediate future, maybe it can be up to 50 million at zero tax. Okay, and also the company income tax rate will reduce over time, all things being equal, from 30% for bigger businesses, or that businesses that might be medium size or small size, but their turnover is higher than 50 million. They start to pay tax at the CIT rate, which might be 27.5% in 2025, 25% in 2026, and probably it stays on like that once your threshold is above certain level. And all of that is there. Also, majorly for those that are enterprises, the owner of the business will be subjected to personal income tax. And in your before you is more or less the new threshold that has been given. And this threshold will now be applicable to every individual or owners of businesses, as the case may be. And likely the difference between this also is that under the current regime, you are also entitled to consolidated relief allowance, but that no longer exists once you move to the next regime. Likewise, pay as you earn, as I've explained earlier, capital gain tax, stamp duty, and the like. Okay, and also I've discussed value-added tax before, but if what has been proposed is what has been approved, you'll find out that except if you're exempted from charging VAT based on your threshold, you might likely now start to charge VAT at 10%, 12.5%, or 15% as time goes on. And likewise, one of the beauty of this new law is that withholding tax that has become a burden on most of us and most businesses has now been reduced drastically. Some have been reduced from 5% to as low as 2%. Some have been reduced as low as 2%, and some still retain 10%, as the case may be from that. And also, small businesses that do not that are not within the tax bracket of which they are supposed to pay tax, company income tax at 0%, will have their invoice amount not subject to withholding tax once evidence is shown that they constitute a small company or small business. Now, what practical strategy can we take to optimize our tax position? I'll just read them out. It's technology. We can leverage tax incentives, especially for small businesses or those that fall within certain sectors. We can also do proper tax planning and documentation so that avoidable tax penalties, dispute with regulators, where you can be forced to pay tax that is not even tax in the first place, just because you fail to document, you fail to provide evidence. We can use that to mitigate against such. We can also navigate tax audit and dispute through engaging professionals. We can do that through various associations we belong to. We can more or less outsource that function so that it comes as a cheaper cost. And you then also need to keep a lot of professionals that can give you advice for free. Even one of the advocacy of NECA is to also provide knowledge sharing session like this that can more or less give value to owners of businesses so that they preempt what tax obligations could be, and they can more or less be aware of the provision of the law, and at every point in time, they do not run foul of the law. Okay, now let's just look at a simple scenario that borders on how compliance, non-compliance may affect a business. Now, this is just an hypothetical company. I call it Farrell Agro Processing Limited. Now, it's Lagos-based company. Now, let me give you a background of the company. The company is a small business in Lagos. The company involved in processing and export of organic food products to Europe. The company started as a family-run business, but aimed to expand by attracting international investors. But the company has challenge. And what is its challenge? Despite having a great product and growing customer base, potential investors were hesitant to more or less fund Farrell due to concern about financial transparency and regulatory compliance. Another challenge is that the company struggled with poor financial records and irregular tax filing, making it difficult to prove its credibility to the international stakeholder. Now, what then is the game changer for this company? Realizing the impact of tax compliance on business credibility, Farrell now register properly for company income tax and value-added tax with the Federal Inland Revenue Service. He hired an accountant or outsourced his accounting function to ensure accurate financial record keeping. Thereafter, he started to file annual tax return on time and obtained a tax line certificate from FRS, and also took advantage of tax incentive for exporters under the Nigerian tax bill. This is a game changer. And what was the result? When an international investor from UK conducted due diligence thereafter, Farrell had a clean tax record, properly audited financial statements, and proof of tax compliance. This gave the investor confidence to inject $500,000 into the business, allowing Farrell to expand into new markets. And what is the takeaway in this slide? Tax compliance builds trust and credibility. A well-documented tax history attracts investors, and MSMEs that comply with tax law can access funding and government incentive. Another case study I have borders on business that suffer due to non-compliance. What is the background of this company? Aiden Logistics Limited is fast-growing transport and delivery service company, operated informally for years, prioritizing revenue growth over tax compliance. The company had multiple contracts with businesses, but did not maintain proper tax record or remit taxes consistently. Therefore, what is a mistake in this case? One, the company failed to remit pay for its employees, assuming it wasn't necessary for small businesses. What is another mistake? Did not keep proper receipts and invoice for VAT purposes. Another mistake is that he assumed small businesses wouldn't face tax audits. And the last one is that it was ignorance of several reminders and notices from the FRS. What then is the consequence? In 2023, the company applied for government contract but was disqualified due to missing tax line certificates. Shortly after, FRS conducted an audit and found out that the company underreported income and failed to remit pay for employees. The total tax liability, including penalty and interest, exceeded 12 million, which was avoidable, especially for penalty and interest. The company bank account was frozen until part of the debt was cleared. Remember the days in which FRS put lien on companies' bank account. And also the business lost credibility, resulting in two major clients terminating contracts. What is the lesson learned? The company had to undergo serious financial restructuring, negotiate with the tax authority, and settle outstanding debt before resuming normal operation. What is our takeaway here? Tax non-compliance leads to penalty and loss of opportunities. MSMEs without a clean tax record struggle with contract and funding. Keeping accurate tax record prevents financial distress. Now, what is my message or NECA's message to most of our micro, small, medium enterprise members is that one, tax compliance is not just a legal requirement, but a business growth strategy. Proper tax documentation opens doors to investments, to contracts, and to financing. Non-compliance results in hefty penalties and lost business opportunities. Therefore, if I were to be an owner of a small business, I will always seek professional advice, professional support from accountants, from tax advisors, from legal professionals, in order to maintain proper book of record, do the needful, and avoid costly mistakes. But this also comes with why sometimes we don't want to comply. We don't want to comply sometimes because we have this concern as MSMEs or as businesses. We also have misconception, which means what we get wrong or known to us. And there are these three things. The first concern or misconception maybe is that government use tax to stifle businesses. The second one is that taxes is only for big businesses. It's not for small businesses. And the third one is that tax payment does not benefit my business. Therefore, why should I pay? We pay it, government spend it. Therefore, but the reality is this. It's not necessarily so in all ramifications. Government use tax to stifle business. It's not necessary, and maybe it's not the primary intention of government. And that's why you must hold government accountable. And government itself must be transparent in all its dealings. And therefore, that is why we expect that the recent tax reform will aim to create a fair tax system. Second one is that tax is only for big businesses. It's a scenario of the might versus reality. But I'll tell us that except for small businesses which turnover is low and are exempted or are subject to tax at 0%, small businesses that have met above that threshold will more or less have to have a well-structured system to comply with tax, as the case may be. Okay, and last, tax payment does not benefit my business. Not totally correct. Okay, long-term businesses benefit. And in this case, a stronger tax history enhances your credibility and more or less provide you room for ease capital, for contracting and the like, as we have explained. Now, what is the recommendation and what is our way forward? Okay, one of it is what we are doing today, which is what NECA has taken as its core responsibility, being the foremost organized private sector in general, is that advocacy for MSME-friendly tax policies. And that's why at every point in time, we are at the forefront of government policy at the formulation stage to ensure that every government policy more or less puts small, medium, micro enterprises at the central core in order to promote them, to grow them, in order to create employment, to create economic buoyancy and the like. And therefore, government must ensure a balanced tax regime that encourages small businesses. Secondly, small businesses, micro businesses, and most especially medium-sized businesses must build capacity among themselves in order to ensure that they are self-aware and they also train the employees and their members. And that is very key. And one of those things is that NECA also provides these services at every point in time, both for free and also some are paid for. Now, you also need to leverage technology for simplification of tax compliance. And this is from the regulatory side. And therefore, and that's why you find out that today, LRS is digitized. I think Ogun State IRS is also digitized, FRS is digitized, FCTIS is digitized. And upon digitization, it means market women who have exceeded the threshold will also on their phones, the same way they do transfer, they do POS transaction, they can also file tax, do everything at the comfort of their phone, even if they don't have a laptop. Okay, and also last, proactive engagement with tax authorities, regular consultation between MSMEs and tax regulator. And what we do mostly at NECA and other similar organized private sector body is to also act on behalf of members to engage with regulatory authorities, as the case may be. Now, in conclusion, summary of my key takeaway is that MSME should embrace taxation as a strategic business tool, not just as to say the law says I pay. No, take it as a strategic business tool. Also, encouragement for MSME is to see taxation as a tool for growth, most especially economic growth and development. Therefore, compliance opens doors to incentives and to youth assessing funds. Okay, what then is our call to action? Importance of professional guidance and timely compliance. MSME should proactively seek tax advisory support at every point in time. But I'll say both accounting, tax, and legal advisory support, you can always get it from your umbrella bodies or from your own smaller engagement as a consortium or like. Upon that, when we get to interactive section, I believe there'll be room for question and answer. Thank you very much for giving me this opportunity once again. God bless you.
Wow. Thank you, Dr. Adebayo. Thank you for a well-detailed, educating, and captivating presentation. Indeed, not even a doing would do better than this. Thank you very much. Thank you so much. Before we go on, proceed to the Q&A question, I would like to inform participants that NECA will be holding an MSME fair on May 6th, 2025. And the flyer is on screen. The theme is galvanizing MSMEs for economic growth and stability. It's a physical fair, which will be held, as is scheduled to be held at NECA House, Alausa, Ikeja. The phone numbers of contacts, NECA staffers are clearly stated, written on the flyer. So we expect participants to call in for more additional information. The MSME is going to be packed, both relevant public sector institutions that regulate businesses and private sector experienced individuals will be at the fair to do justice to the theme. So we encourage participants to look forward to this and call in for further information. Thank you very much. So going back to the Q&A section of our first presentation, a presentation that was well done by Dr. Adewale, Dr. Muyiwa Adebayo. So we'll be expecting, though I've dropped in the chat box, I'd encourage participants to drop their messages in the chat box, although I have not seen any. I've not seen any question dropped there. I expect that by now I should have a number of questions. So I encourage you once again, participants, to drop in your questions in the chat box so that we can quickly present them to Doctor to do justice to them.
Mr. Chuku, there's a question in the chat box, please.
I'm looking at it now. So we now have a question, and it goes thus. Doctor, I'll be reading the question out to you, sir. How can an individual organization keep up to date with emerging tax regulations and trends? How can an individual or organization keep up to date with emerging tax regulations and trends?
Okay, I think, as I've said earlier, one of those things you need to do is that first you need to, as a business owner, as businesses, you need to first of all belong to your own micro association before you now have a bigger umbrella. And also doing so, there'll be at least a way of having interaction where information flows around. For example, if you are also a member of NECA, there are always interactive sections that goes on at least once or twice in a month. And sometimes there are publications. You also need to follow up with newsletters. You also have to read up news, do all sorts of things as the case may be. Therefore, all of those things are things that are critical in what you do. Okay, another thing is that you need to, if you don't have a professional, you yourself need to more or less acquaint yourself with the websites and bulletins of agencies like FRS, LRS, and the like, depending on the states you belong to. Also, there are situations where there are presentations like this where they call knowledge sharing sessions. You also do that. And most especially, the best of it all is that even if you can't, as a business on your own, you can group yourself together and engage a small accounting firm or small tax professional who will always give you guys updates over time. You understand? At little or no cost, as the case may be, because most times you are faced with the challenge of running your business, but they have expertise in keeping track with regulations, with legislations, with changes, with strategies and planning. Okay, and that can leverage. You can leverage on them, and they will leverage on the little things they earn from you. At the end of the day, it's a win-win to us all. It's just for us to follow through all of this. And once you follow this through, you get it right every time. Thank you very much.
Thank you. There's another question we have. The participant is asking if one can still file tax even when income is zero. If a company or organization can still file tax even if income is zero during that accounting period.
Okay, thank you very much. It depends, okay? Let me delineate it, okay? First, let us take the small business or the medium business as a company, which means it's registered as a limited liability company. If that is a position, okay, you file tax even if you are not, you file company income tax return, even if you are not, if you have not met the threshold, which means, let's say currently today is 25 million. Even with 25 million naira revenue, you are still expected to file tax return. What it means is that you compute your profit and all sorts of things. And the only difference is that you are going to apply 0% on it and you file it, okay? And such return is a new return, which means I'm not paying any tax because I'm still a small company, but this is my record. You do that. Even for VAT, if in a month you are supposed to start VAT, but for that period, there's no transaction, you still file new returns to say, for this period, though, I didn't make sales, and therefore I can't remit VAT, it's zero VAT, but you are filing returns, which means, except if you are totally exempted. For example, currently, any small business is totally exempted from filing, from charging or filing VAT return, provided it didn't collect VAT. Okay, that one you are not going to file. But if you are not exempted, but you don't have VAT to remit because of probably for a period of 1 month you didn't operate. Therefore, you still need to let the tax authority be aware that there was no operation. Therefore, you file no return for that period, which then means that it's essential, except where by law you are totally exempted from doing so. You must file returns, even if it's a nil return. Does that make sense?
Thank you, sir. Thank you. There's yet another question. This one says, what component of the salary is the percentage of PIT calculated upon?
Okay.
What component of the salary is the percentage of PIT calculated upon?
Okay. Now, I believe the person is talking about the new law that is being proposed. Okay. Now, whatever your salary components are, your basic salary, your housing, your transport, whatever you call it, once you aggregate them together, okay, less any pension contribution you've made, less any contribution to Nigerian Housing Fund you've made, National Housing Fund you've made, less any life policy premium you paid last year, less any interest on mortgages you've taken last year, and so once you deduct all of those ones that are deductible or relief, and again, as I've said earlier, there's no longer consolidated relief other than those ones I've mentioned specifically. Whatever is left is what we call your taxable income. Okay, is that taxable income that will be subjected to the graduated table I showed earlier, where your first 800,000 will be subject to tax at 0%. Thereafter, your next 2.2 million will be subject to tax at 15%. Thereafter, your next 9 million subject to tax at 19%, 18%, your next 30 million to 21%, your next 25 million to 23%, and anything above 50 million will be subject to 25%. And that's what the position is.
Thank you, Doctor. You've certainly done justice to the subject and even to the questions that popped up, that participants were able to throw. We thank you very much for this, for ordering us to come to share your rich perspective with participants. And we can't thank you more. Thank you very much. And we will be hoping to see you some other time. If you have the time to accord us this kind of privilege, we would always appreciate you, sir.
Thank you very much for this opportunity.
All right. So
God bless you.
Of
Thank
course.
you.
Thank you. Distinguished participants, we'll be moving to the next on our agenda, which is the second presentation on ongoing tax reforms and the implications for businesses. This topic will be made. Justice will be taken on this topic by Mr. Adeyemi Adejuran. Mr. Adeyemi Adejuran is a partner in the commercial practice group of Anderson in Nigeria, bringing over 17 years of experience in tax compliance and advisory services across diverse industries. He began his career at KPMG, where he honed his expertise and advanced to the role of manager in the consumer markets group. He later served as a group tax manager at the Flour Mills of Nigerian PLC, navigating complex tax challenges within one of Nigeria's leading corporations. Since joining Anderson in 2018, Adeyemi has been instrumental in delivering innovative tax solutions and driving growth for his clients. Adeyemi Adejuran is a partner in the commercial practice group at Anderson in Nigeria, bringing over 17 years of experience in tax compliance and advisory services across diverse industries. He began his career at KPMG, where he honed his expertise and advanced to the role of in the consumer market group. Renowned for his ability to collaborate seamlessly with multidisciplinary teams, Adeyemi works closely with middle and senior management to optimize tax efficiency and enhance operational efficiency. He holds a degree in physiotherapy from the University of Lagos. He's a fellow of the Institute of Chartered Accountants of Nigeria, a member of the Chartered Institute of Taxation of Nigeria, CITN, and earned a master's degree in legal studies in taxation, MLST, from the University of San Francisco. Sir, we thank you for coming, and we hand over the stage for you, sir. Thank you very much.
Yeah, good morning, and thanks for the opportunity to speak here today. So let me put up my slide. So I think my work is a lot easier from listening to Dr. Olumuyiwa Adebayo. I think he has done significant justice to the topic. I'll just run us through the impact of the tax reforms, looking at the Nigerian tax bills, the withholding tax regulations, the VAT exemption order, and how it impacts micro, small, and medium-sized enterprises. When I talk about tax, I always refer to these two quotes. One is by Frederick the Great, an 18th century king, who says, "No government can exist without taxation. This money must necessarily be levied on the people, and the grand art consists of levying so as not to oppress." So every citizen of the country has an obligation, to contribute to a common purpose for the development of that country. And if you take a cue from Benjamin Franklin, he says, "In this world, nothing can be said to be certain except for debt and taxes." So one way or the other, we are all taxed, one way or the other. If we are not taxed directly, we are taxed indirectly. And with the tax reforms that the government has introduced, I think largely we can say that the intent of the government is to levy, and generally we can also agree that their intention is not to oppress. I mean, from a perspective of the changes that they have introduced. So we should, at the end, talk about the Nigerian tax system, the recent tax reforms, and then the implications, benefits to MSMEs. The Nigerian tax system, as we know it, is divided into federal taxes. The federal government collects taxes through the Federal Inland Revenue Service. The state collects through the State Internal Revenue Service. And the local government collects through the Local Government Revenue Committee. We are all aware that the Constitution provides what type of taxes are collected by the different tiers of the government. You recall when there was some dispute between the federal and the states on who has the taxing rights to sales tax or VAT or consumption tax, as it were. The reference is always the Constitution that provides what is collected by each tier of government. What are the challenges for MSMEs? Multiple taxation. There are over 39 different tax levies. Some reports will say 39, others will even say as high as 100 or 150, because local governments, are at liberty to introduce so many kinds of taxes. In 2025, you still hear of things like television levy, fire levy, radio levy, and all the likes. And I think the intent of the new tax bill is to reduce the plethora of taxes to single digits. And I think they've started on that journey, and we hope they get there. High tax rates. The MSMEs also still perceive that the taxes are burdensome. Yes, government has responded by making certain exemption on company income tax, on VAT, but at the state level and the local government level, it is not certain that there are still exemptions in that regard. When you want to pay certain taxes, property taxes, and the likes, there is still some huge tax burden in that regard. Limited access to incentives. MSMEs most times will not be able to present all that is required to qualify for certain incentives. Take pioneer status, for instance. Are you making enough investments that has a lot of impact on the economy to be exempted from certain taxes, But the government has also, like I said, responded in that regard that you don't need pioneer status incentive if you qualify as a small company, and so you won't pay taxes regardless. Complex tax processes. Yes, on one hand, the Tax Pro Max has added significant value in digitalizing tax compliance. On the other hand, how many MSMEs have the competence to navigate through it? Insufficient awareness and education. Government can do more. And we tax consultants also can do more in educating the populace on the obligations and incentives, benefits that accrue to the MSMEs. Inconsistent government policies. In the past few years, we witnessed the introduction of finance acts, the yearly introduction of finance acts that actually made significant changes to our tax regime, which made it a bit difficult for businesses to plan. But with these tax reforms, I think the Finance Acts are going to take a back seat where these reforms, these new bills are passed, so that people can, let the tax laws sink in and plan for their businesses medium to long term, as opposed to yearly significant changes to our tax laws. So it's a welcome development. What are the tax bills? I think, again, Dr. Muyiwa has talked about this, the Nigerian tax bills, joint revenue, board establishment bills, Nigerian tax administration bill, Nigerian Revenue Service Establishment Bill. These bills tackle different aspects of taxation, from the core provisions of the tax laws to the administration of the tax laws, to the laws that govern the administrator of the tax laws, and how the various administrators, can, work together in order to work seamlessly and not be a source of burden to the taxpayer. So that's the whole essence of this. If you look at the objectives of this tax reforms bill, consolidate the tax laws, you wouldn't have Personal Income Tax Act somewhere, Company Income Tax Act somewhere. The Nigerian tax bill is that single law that you find all the income tax present. Increase revenue and support growth. There's an intention to tax the rich more and exempt the vulnerable, the poor, and the small businesses from the tax burden that accrues to the whole country. There's also an intention to enhance tax compliance, to improve tax equity. Like I said, the rich pay their fair share and the poor are also exempted. Modernize the tax administration through digitalization. We'll talk about that also. They are taking a step further from the Tax Pro Max initiative. Expand the tax base. Yeah, there's an intention to do that as well. With the exemption, people will feel okay to engage the government on their operations, because those exemptions are there. And when their businesses grow, they're already captured in tax nets and they can easily then comply with those provisions. So let's look at some of the provisions that I think impact the MSMEs. Some come as obligations, some come as incentives. But these are the things that should the laws be passed, the MSMEs need to be aware of. I have a short time, so I'll run through it. The last speaker spoke about this in terms of the personal income tax as it relates to taxation, where you have an unincorporated entity. What's the impact? Currently, taxes is in three phases. The tax rate is in three phases. So you have the small company, the medium-sized company, and the large company. Now, if you are an unincorporated entity, you will be taxed because if you are a business name, the business name is not a separate legal entity from the individual. So this would apply to that business because it's not a separate legal entity. It will also apply to individuals. And since we are talking about MSMEs here, what the government has done is technically to remove the medium. So there will be only two kinds of businesses, essentially. We'll get there. But with this payroll, if we focus on the individuals, the employees in those MSMEs, what the government is saying that if you are earning above 50 million, you won't be subjected to tax. And you'll be subjected to tax at 25% rather. If you are earning below 800,000, you'll be subjected to tax at 0%. Sorry, that was a mistake. So the impact on these small businesses is that above 50 million revenue, if you're an unincorporated entity, you'll be liable to tax at 25%. If you earn below 800,000, 0%. So what should MSMEs do when this bill is passed is to change their payroll software to be able to accommodate the new tax regime such that they comply with the new provision of the tax laws. If the payroll software is not updated, that means you'll be paying taxes that you probably shouldn't be paying. So that's the import of this. We go to the next one. If you look at the previous personal or the current Personal Income Tax Act, what it says is that everyone is entitled to a CRA of 200% or 20% of gross income, whichever is higher, and then an addition of 1% of gross income. Now, all that has been taken away or is intended to be taken away. So the only benefit in terms of CRA is limited to 200,000 or 20% of annual rent paid, whichever is lower. So there's a cap of 200,000. And for me, I think that if the cap is 200,000, it is low enough because the people that fall in that category are the low income earners. So there shouldn't be an additional burden for them to then write to the tax authority for them to be able to claim that benefit. So I'm hoping that this provision to write to the tax authority before this benefit is claimed will be removed in the final version of the bill that is passed. Now, let's talk about capital gains tax. For capital gains tax, prior to now, currently, the threshold for paying capital gains tax on compensation for loss of office is 10 million, meaning that if an employee loses his job and you are paying less than 10 million, then that amount will be exempted from tax. Now, the current bill is proposing a higher threshold of 50 million. So if you are earning above 50 million for compensation for loss of office, it won't be liable to CGT. So I would expect that most employees of MSMEs won't fall in this category. They will be exempted. And there is an intention to increase the rates from 10% to 27.5% in 2025 and 25% in 2026. I think that is a whooping increase from 10% to 25% in 2026. But I understand the intention. The intention is to align the income tax rates with company income tax. But I think is a high risk. Now, if you sell your car or you sell a personal asset that relates to the business or relates for personal use, and that asset is more than a 1,000 naira, that asset will be liable to capital gains tax. So imagine from that threshold, what it means is that almost every car that is, or almost every asset that is sold will be liable to capital gains tax. Now, what the government is proposing is to increase that threshold to 5 million. This also shields transaction at the micro, small and medium scale level to a large extent, where the assets below 5 million is liable to capital gains tax. Now, there is a current provision as it relates to capital gains tax, not on asset now, on shares. When you dispose shares right now, and the aggregate disposal is above 100 million, it will be liable to capital gains tax. What the government is introducing with the bill is that they've moved the threshold to 150 million. And there is an additional cap that, provided the capital gains is not exceeded from capital share transaction, is actually 140 million. But your capital gains is higher than 10 million, then you'll be subject to capital gains tax. But I think generally speaking, there is a movement from what the current thresholds are, the high threshold. I think is an adjustment for inflation, because the value of the naira fuse is not the value of the naira now, and government is responding to that and increasing that threshold from 100 million to 150 million. So most transactions at that micro and small scale level should be exempt. Now, we then look at Company Income Tax Act. The first provision here talks about the definition of what a small company is. Remember, I said that generally the government has actually removed that medium-sized company whose turnover currently is 25 million to 100 million. The proposal now is that there's only a small company and a big company. So if your turnover is less than 50 million and your assets, your fixed assets is less than 250 million, then you qualify as a small company. If your turnover is higher than 50 million, then you qualify as a big company. For you to qualify as a small company, you have to meet these two criteria. Now, what this means is that the medium-sized entities that used to pay lesser tax under the or that are paying lesser tax under the current regime. Let's say you earn 75 million. Under the current regime, you won't pay 30%. You know. So what this means is that in the current dispensation or in the proposed dispensation, you won't fall into the category of a medium-sized company. You fall in the category of a big company, and you pay tax at 30%. Or the intention is to reduce even the tax rate to 25%. So there's no middle player. It's either you are small or you are big. So the rates of tax, like I said, the root tax the proposal is to eventually reduce it from 30% to 25% in 2026. And this is just buttressing my point that once the bill is passed, small, medium-sized companies that are now paying tax at 20% will begin to pay tax at 27.5%. But that will reduce to 25% in 2026. So currently, in calculating capital allowance, there's what we call initial. So in your first year, you get two tax benefits. Initial allowance once you're completing capital allowance, just compute it flat. I think the intention here is to reduce the complexity. So they are removing what we call initial allowance. It's not necessarily a removal of an incentive, because if you remove initial allowance, what it means is that your annual allowance is going to increase. So what government is saying, rather than having the complexity of computing initial allowance and annual allowance, we are going to streamline to only annual allowance. So the capital allowance may reduce in the first year, but the total capital allowance that you would claim eventually will be the same. So I think the intention here is to reduce complexity in the computation of capital allowance, which is the allowance you get on fixed assets as a replacement of depreciation, which is disallowed for tax purposes. So that's what this is all about. So mergers and acquisition. Yeah, I struggle to introduce this slide here because we are dealing with small, medium, and medium scale and micro businesses. But from my experience, there have been many small businesses that have been acquired by bigger players. And so mergers and acquisition, mainly acquisition happens in that space. Rarely will you see two small companies merging forces, but a lot of acquisition happens in that space. And what the government is saying is that, hey, when there is an acquisition or a merger, I'm not going to tax the transfer of assets relating to that merger from an existing business to the enlarged business. So I'm not going to do that. I'm just going to treat you as a continuing business. So unutilized losses from the merging entity and other tax benefits can be, utilized by the surviving business. And I think that's a welcome development, because the current provision has also, even the tax finance that has made improvements in that law. I think this is just re-emphasizing that. Now, transfer pricing. Currently, if you, as a company, if your parent company is non-resident and you need to pay royalties, the threshold is 5% of EBITDA. Now, the tax laws is now introducing a provision that royalties and fees or similar payments to non-residents will not be allowable as a deduction when you're paying that. But it's important to note that what this applies to is permanent establishments, not subsidiaries of parent companies. So if the permanent establishment, meaning that business in Nigeria, is not different from the non-resident companies, where you have a business center that is not its legal entity, but it's an extension of the office of the non-resident company. Any payment in terms of royalties or fees will be disallowed, because, you are really not a separate entity for the parent company. So I think this goes without saying. But if you're a subsidiary, you should be able to still claim royalties as a deductible expense. So this is another incentive that is introduced. If a company qualifies as a small company under the new proposed tax regime, then that company will not be paying development levy. Development levy in itself, that's your tertiary education tax, your police trust fund, and all of that. The plan is to compress all of that into one single levy called development levy. And the rate that the government is proposing is 4%. And that's significant because currently companies pay different rates, one rate for tertiary education, another rate for NITA, 1% of profit before tax, and different other levies, NASENI and all that. Government is saying, okay, I want to collapse all of this. And then you pay development levy of 4% in 2025 and 2026, 3% from 2027 to 2029, and then lower into 2%. I'm aware that the Governors Forum have kicked against this, and there are conversations ongoing to reach a midpoint with respect to this levy. So this may not see the light of the day by the time they pass the laws, but this is what currently exists. So we go to value-added tax, like my colleague had said. Yeah, there is a proposal to increase value-added tax from 7.5% to 10%, eventually to 15% in 2030. But it's important to note that what the government is doing is also to expand what you can claim to reduce the VAT payable. So currently, based on the law, the input VAT that you can claim against the output VAT, I'm trying to reduce the technical terms I'm using. So output VAT is the VAT that you charge your customer that you are supposed to remit to the government. Input VAT is what you incur when you purchase goods. So what you're supposed to pay to the government is the difference between output VAT and input VAT. But the current law limits the input VAT that you can claim against your output to goods that the VAT that you incurred on goods that you bought for resale, and the VAT that you incur on raw material that is used for the production of a new product. So any VAT that you incur on consumables, for instance, should be expensed. You can't use it to deduct your output VAT. So what the government is proposing is say, see, we are going to increase the rate to 10%, but we are going to remove the limitation in deducting input VAT from output VAT. So you can claim input VAT on consumables and all the other purchases that you've made. And that's consistent with what is obtainable in even other African countries. So we will only see the impact when the law is passed, because it's like I'm increasing the tax rate, but I'm also giving you additional incentives. Yeah, zero-rated VAT supplies. So what government is saying is, rather than they are making VAT on some transaction to be at the rate of zero on electricity bills that you purchase, agricultural seeds, educational books, fertilizers. And they've moved from being exempt from VAT to zero-rated. When you're exempt from VAT, when a good is exempt from VAT, any VAT, input VAT that you incurred in producing that product, by the time you sell that product, it's still not, the input VAT is not allowable as a claim because the final product is exempt anyway. But what this zero-rated means is that you can still claim input VAT even though the final product is at a rate of zero. That's the government's intention, to provide additional incentive on certain key areas of the economy, like the electricity, like education, like agriculture. And I think that's a very good introduction. The other thing the government wants to do is what we call fiscalization of the VAT filing and collection. What currently exists is that you file your tax returns on tax promax. That's a step in the right direction. It used to be fiscal filing in the past. Now it has been digitalized, meaning that if a deadline for filing is 12 midnight on a Saturday, I can still file my returns because I don't need to go to any office to file my returns. Now, what the government is saying is that I need more visibility on transactions. So I'm going to take my own software and key it in to your own device, and so that I can see the transactions as they occur. I also collect my VAT as the transactions occur. So government wants a synergy between their own software, which is designed for tax purposes, and maybe the software of businesses, so that they can monitor transactions. So I've spoken about this. Another introduction is the Office of the Ombudsman or the Ombuds. They decided to free away from making it gender-based. So it's the ombud, instead of saying ombudsman, as against ombudswoman. So it's the tax ombud. And this is an independent body that is supposed to serve as an intermediary between taxpayers and tax authorities. And the intention is that, okay, not everything should land in court. Let's have a kind of arbitration. So MSMEs can go and seek redress at the tax ombud and not necessarily go to court, And this body is supposed to be an independent examiner of the issues and should typically look at things from the taxpayer's point of view. Some people have criticized this because they are curious on how it will work, because it's the government that is going to pay the tax ombud. It's the government that is going to appoint the tax ombud. But there are reports that this system has worked in other claims, because it's the government that pays the courts anyway. It's the government that pays the industrial court anyway. But it doesn't mean that when somebody takes government to court, that the government is going to pay. It's always based on the facts of the case. So we'll see how it's going to play out. Now, those are general provisions as it relates to the tax bill would allow. There are other aspects of tax reforms, which we also touched on, and I want to also discuss certain aspects as it relates to the withholding tax and the VAT exemption order. I think the withholding tax regulation has been long overdue. If you look at all the finance acts from 2019 to date, there's little or no modification as it relates to withholding tax, other than reduction in rates to 2.5% as it relates to construction of buildings and bridges. There was no significant amendment to the withholding tax regulations, and this is very important for businesses. So let's look at what that regulation says, which was introduced on 2nd October 2024 and became effective on 1st of January 2025. It covers withholding tax as it relates to CIT, capital gains tax, and the objective is to cover tax evasion, reduce rates of deductions, and ease compliance. And to a large extent, I think this regulation actually achieved this objective. What I'm not sure is how the tax authorities are going to implement it, because there's a huge element of digitalization that is required, especially at the state level. But let's see what it says. Currently, if Mr. A engages Mr. B and Mr. A is not registered for tax purposes, Mr. B can deduct withholding tax when paying Mr. A for his services and still remit the withholding tax to the government at the rate prescribed. And in some cases, if it relates to the FIRs will generate a tip for Mr. A so that Mr. A can remit the withholding tax. What the government is saying now, that is not enough punishment for somebody that does not have tax certification number. We are not going to stop you we are not going to stop the transaction from holding. What we are going to do is that we are going to increase the withholding tax rates. So if you don't have a thing, rather than somebody, the other party, applying a rate of 2%, the other party is going to apply a rate of 5%, of 4%, which is twice the rates, and that's what this is about. And it relates to non-passive income. So government is trying to say that I'm going to bring more people to taxing it, because if you know that the rate that is going to apply is higher, then there's an incentive to go and get a tax allocation number. Now, the way the regime worked before, small businesses still had the obligation to withhold tax on transactions and remittances. But the new withholding tax rate says, hey, there are small players in the economy, they should be exempted from withholding tax. That's if they have a turnover of less than 25 million per annum, and the value of the monthly transaction is less than 2 million in the relevant month, and that they have a valid team. Again, if you are a small business and you don't have a team, even though you're a small business, withholding tax should still be withheld from the transaction because the government doesn't have visibility of what you are doing. You don't have a tax identification number. So this exemption will not apply, even though you are a small business where you don't have a tax identification number. Now, what has happened in the past? Technically, what withholding tax regime is that if Mr. A transacts business or provides his services to Mr. B is going to withhold tax. That withholding tax is an advance payment of income tax by Mr. A. So Mr. B is going to serve as government's agent, withhold the tax, and remit to the FRS. The FRS will acknowledge the amount and then issue a withholding tax credit note. All this happens within the tax promise. Now, if you do not withhold tax, if Mr. B does not withhold tax and pays Mr. A in full, there's going to be a penalty of 10% and an interest at the CBN rate. Government is saying that that doesn't look good for business. They are now saying that if Mr. B should withhold tax from Mr. A, Mr. B should issue a receipt to Mr. A. Now, even if Mr. B does not remit that withholding tax to the government, the withholding tax regulation is that it says that if Mr. A presents that receipt that Mr. B has issued, that the tax authority will issue a credit note to Mr. A and then go after Mr. B. But if Mr. B does not withhold any tax and pays everything to Mr. A, since Mr. A is still going to pay tax at the end of the year, we are going to apply only an administrative penalty to Mr. B. So this simplifies the credit utilization system. But the issue is, will the tax authority issue credit notes to Mr. A just on the basis of the receipts that has been issued by Mr. B? So time will tell, but a lot of improvements has been introduced by these regulations. And it's not something that is already operational. Exemptions listed here, but it's important to know that manufacturers are exempted from withholding tax, telephone charges are exempted from withholding tax, petroleum, liquefied petroleum gas, natural gas, PMS, that's petrol, diesel, that's AGO, all exempted from withholding tax. Insurance premium is exempted. So the government is saying by exempting these transactions from withholding tax, they are putting more money in the hands of businesses so that they can transact and grow the economy. It's a welcome development. This is what the rates look like. A lot of rates that were 5% are now 2%. And I think what the government has done is to move away from the dichotomy of different rates applying to a limited liability company and a non-limited liability company. Now, what they have done is to say, we are going to rather make the distinction between a Nigerian company and a non-resident company. In the past, a limited liability company will pay higher withholding tax, while a business name will pay a lower withholding tax. It didn't really make sense because some business names and some partnerships have even their businesses are more established than some limited liability companies. So government is rephrasing that, and they have rephrased that and say the distinction is going to be between resident company and non-resident companies. Some clarities have been provided as it relates to withholding tax deduction, and that includes manufacturing, production. They've defined that. Professional fees has been defined. When you work with the tax authority, there are instances that the tax authority has sought to charge a higher withholding tax rate on a company providing cleaning services. So no, not just anybody can clean. So this person sweeping this place is providing a professional service, and the withholding tax that should apply is 10%. No, what the government has done now is to say, no, except you have a license from a specialized body and you undergo a specialized training, what you are providing is not professional service and should not attract a higher withholding tax rate. Now, betting, gains from betting will also be liable to withholding tax. The net amount paid to the participants will be liable to withholding tax. They've defined across the counter transaction. Also, the timelines for remittance. The previous speaker spoke a lot about timelines and obligations to pay taxes. So I won't dwell on that. So what are the implications of withholding tax regulations in MSMEs? Like I said, clarified tax exemption, tax compliance obligation has been made. Withholding tax rate that used to be 5% before are now 2%. MSMEs should look at their accounting records and adjust accordingly, so that because the old rates no longer apply, there's a credit system that has been applied. So once you get a receipt, you can get a credit note. You don't have to wait for the person to remit the taxes before you get your credit notes. Exemptions have been introduced to energy sector. So quickly, because of passage of time, I'll talk about the VAT modification order. This order is also known like the tax reforms bill. It has been signed, it has been gazetted, it is available for the benefits of companies, including MSMEs. So here, what has been done is that there's VAT exemption on PMS, AGOs, liquefied petroleum gas. If we look at the proposal in the tax bill, proposal is to make some of these things zero rated. And I also want to say is that by the time they are passing on this withholding tax regulation, one point, the definition of withholding tax regulation should take is leaning from the bill that will be passed. So that 25 million should be adjusted to the definition of small companies in the new bill, so that there's an alignment between the laws. So here, all these products are exempted from VAT based on the order. This is targeted at CNG, LPG. When you're in that space, operating in that space, or buying electric vehicles, you're involved in assemblage of that, all of that is exempted from VAT. So given all that we've listened today, why should you bother about complying with taxes? From my experience, this is significant. I consulted for a company that was a major distributor of a premium wine brand, whiskey and wine and all that. But business grew so large and they were so successful that the parent company was interested in buying the local company. The parent company eventually, or I'll say the manufacturer of the products or the major distributor globally, was interested in absorbing the Nigerian company as a subsidiary, but they couldn't do so because the tax records were not verifiable and the investment did not sail through. So it's important to have the end in mind, not just government, but business expansion. To avoid undue harassment from the tax authority, you just want to comply and be be compliant with the relevant provision of the tax laws. Penalty and interest payments. This can be significant. Why not pay now the liability that you owe? Why pay later where you have to pay penalty and interest? The other thing is reputation. There are times that the government may list on the newspaper non-compliance companies. You don't want that damage to your brand. You want them to be able to look at your books. There are times that even government paste non-compliance stickers on doors. You don't want your customers to come to your doorstep or your clients to come to your doorstep and you're seeing a non-compliance sticker pasted on the door of the premises or the entrance of the premises. It damages the brands. It impacts the reputation. Nation building. We have a collective responsibility to build a nation so that the government can provide the much needed infrastructure. I know the conversation goes both ways, that when we pay our tax, there should be probity on the part of the government, such that they should be able to tell us what they've used the money to do. It's also always a chicken and egg situation. If you don't pay your tax, then there's even really nothing for the government to even work on. So while we're calling government to show more transparency and accountability, we also need to do our bit for nation building and contribute to our dear nation by way of taxes. Being compliant keeps your mind at rest. You are not afraid that the LRS will come today or the FRS will come today. You are at rest because you know whoever wants to open your books for scrutiny, you are fully compliant with the provision of tax law and there's nothing to worry about. So what do you do to be compliant? There are many people, sometimes I receive calls to say that I want to pay my taxes. How do I go about it? Or what tax should I pay on this transaction? I don't want the government to come later and then disturb me. I just want to pay now so that I can enjoy the net amount. First thing is to keep proper bookkeeping. And that also goes to having the right tax strategy, having the right legal entity. But bookkeeping is very important. Second thing is knowledge of the compliance requirements. What are your obligations to the tax authority? What are your obligations to the states, the federal, the local government authority? You need to have that at the back of your mind or at the front burner of your business. Your accountant, your bookkeeper should be clear about the obligation of the company to the tax authority. Have a plan for compliance. Have a strategy for compliance. There are some taxes you shouldn't even be paying if you are well structured in the right manner. You need to look at that based on the provision of the law and have a plan to pay what is due and to not pay what you shouldn't pay. Keep abreast of the new developments. How do you keep abreast? Dr. Muyiwa mentioned about, engaging consultants or staying close to consultants so that you can know the changes in the tax space. A firm like ours, we send tax alerts and tax news, as it were, to companies, to individuals free of charge. So if we get your email address, for instance, we can include your email in our mailing list and you get those alerts free of charge. You can stay abreast that way. And I'm sure even many other big consulting firms, it doesn't cost for you to be on the mailing list. So that's one thing you can take out of this session. Treat tax matters and correspondence with care. Who receives letters from the tax authority in your business matters? I've been a consultant to a school back in the day that the LRS brought a letter to the school, but the school was on vacation, and the gate man just put it under his table that when they resume, they will attend to the letter. But the letter had a 7-day response notice, but the school was away for months. And by the time they resumed, the LRS came with police and all of that, It was while looking for where the letter was that it was discovered that it was at the drawer of the gateman. There must be some effective document handling, correspondence handling with the tax authority such that it is responded to as at when due. So lastly, seek professional advice and support. There is always a consultant out there that can help you. There is no amount, there's no amount that is too small that you won't find a consultant that would even help you for free. So belong to relevant WhatsApp group, relevant industry groups, and they can point you in the right direction. And I would say with that, that will be the end of my presentation, and I welcome comments and contributions. Thank you.
Thank you, Mr. Adejiran. It's been a very robust presentation, an educating one. So without wasting much of our time, we've looked at the chat box. We didn't get any question. And we've scanned through our YouTube channel to see if some of the participants that couldn't come in had posted any, but there appear not to be any question there. So I don't know. With that, I would want to call on to, unless of course.
Tochukwu, I think if you check, I think somebody just posted.
Okay, let me quickly look at run through it and see.
I think we have a question. Yeah, you can see it.
Yes, there's a question on, do we still need to file in tax even when we didn't generate income for a particular month or period? I think that's been discussed extensively here. Then the other one is, please, what is the tax law on withholding tax as it affects small businesses? Unless Mr. Adejiran wants to put more light to that, because I'm sure he actually spoke extensively on that.
Okay.
So I don't know if you want to speak more on what is the tax law on withholding tax as it affects small businesses.
Okay, so what the regulations currently say is that small businesses are exempted from the obligations as it relates to withholding tax. So you are not required to withhold, as it were. But what that obligation is attached to is if you have a tax identification number. So even if you are a small business and you do not have a tax identification number, in the eyes of the law, you are not a small business and you should be told from transactions that are applicable. And it also says that people shouldn't be told from you if your turnover is less than 25 million. And what also that culminates to is a 2 million turnover monthly. And the government is saying that when you do business with others, they shouldn't withhold tax from you. And the technical interpretation of that is because you are not liable to company income tax anyway, because the Company Income Tax Act also exempts you if your turnover is less than 25 million from tax. So since you are exempted from company income tax, parties should not withhold tax on your invoices. But you then need to prove that you have a tax identification number and your turnover is indeed less than 25. So I think that's the answer in the option.
Thank you very much. There's another simple, they said, newly registered businesses automatically exempted from VAT. The idea is that revenue would have been below threshold. I don't know, sir. I want to, put more insight into that.
Yeah, I think the comments already answers itself.
Yeah.
I mean, if you're a new business and you don't have any transaction or any revenue, yeah, so there is no VAT to pay. So there is really no obligation in that regard. So I would say that's more of a comment than a question.
Yes, I think we've been able to attend to all the questions on the chat box. I encourage participants to go through the chat. There are some solutions, some answers to their questions already posted to the chat box. They should just look at it and see where it applies to them. With that, I want to once again thank you, sir, for this robust presentation. Thank you very much.
You're welcome. Thanks for having me.
All right, so with that, I want to call on Adenike Adebayo Ajala, Mrs., Director, Social Labor Affairs, SLA, and Project NECA for a closing remark. Thank you, madam.
Wow, wow, wow. It has been such an interesting 2 hours. I'm sure you will all agree. Thank you so much to Dr. Olumuyiwa Adebayo. He stayed with us throughout, and he has been providing solutions to some of the questions that we have been asking in the chat box, even during the presentation. Thank you so much, Mr. Adeyemi Adebiro. We are grateful to you for sharing your wealth of knowledge with us. We know that you are members of the association, and part of it is you giving back to NECA. So we thank you so much. I'm sure we'll all agree that today's meeting has been crucial as we navigate the new tax reforms. As you mentioned earlier, what we would like is for you to apply this knowledge in your various businesses in order to enhance compliance. We thank members of staff, my colleagues who are the back end, for all their contributions. And we encourage you to please stay up to date with all our activities via our social media channels, which my colleagues will project. Yes, thank you so much. Please stay up to date. We have a lot of programs. We have a lot of activities for businesses, for our members, and for MSMEs that are on our social media channels. And we look forward to having you on our other programs. I also want to use this opportunity to remind you about the MSME Summit that is taking place on the 6th of May. We'll be sending you information on how you can participate, and we look forward to your participation at that event as well. So thank you once more for everyone that has stayed on the program. There are so many people also on our YouTube channel. You can catch up. For those who are not able to get the full information, you can please check our YouTube channel for the full video of this program, and we look forward to seeing you at our next TSS. Thank you very much on behalf of the Director General, Mr. Adewale Smart-Oyerinde, and we wish you a very productive rest of the day. Thank you very much indeed.
Thing was taken, still had to make it. Vibe killer, me I no go take shit. Vibe killer, bloody somebody time. Protect my energy from your bad aura. Let my pastor say I be my healer, everything I desire. I go receive my rhythm, flow like a river. If you get yawa, come on go and sit down. I go just para, come off my jigger. I go just follow my dream. I'm feeling vibes on vibes. I'm a ticking dynamite. I blow your candle lights. my movements. This bad bitch bad every day. I know they look at your face. Bad man bad every day. Get on your knees and pray till you regain your faith. Bloody somebody time, protect my energy from your bad aura. Let my pastor say I be my healer, everything I desire. I go receive my rhythm, flow like a river. If you get yawa, come on go and sit down. I go just para, come out my jigger. I go just follow my dream. I'm feeling vibes on vibes. I'm ticking dynamite. I blow your candle lights. You know I'm just that type. No, them don't fit kill my vibe. You no fit kill my vibe. You no fit kill, you no fit kill, you no fit kill my vibe.
as the clouds go gray. Thunder roars and the earth sings. The season's just beginning. The sunlight it hides as the clouds make way. For the pouring of my blessings, I will not be afraid. I see it now, I understand, I know. So I embrace it, dance. In the rain, it's for my seed to grow. For every prayer and every seed I've sown, the Lord of the harvest knows I'm reaping back 100-fold. The land is green, it's green, oh, oh. The land is green, it's green. Can't you see? The harvest is ready, 'cause the Lord of the harvest told me so. It's green for me. It's green for me. Standing alone can be a heavy load, but my vows I won't be breaking. Though my heart is aching, I got a word and I won't let go. It's your will I'm seeking, so I keep on believing. I see it now, I understand, I know. So I embrace it, dance. Once again, it's time for me to grow. For every prayer and every tear I've sown, Lord of the harvest knows I'm reaping joy 100-fold. The land is green, it's green, oh, oh. The land is green, it's green. Can't you see? The harvest is ready, 'cause the Lord of the harvest told me so. It's green for me. I thought it was over, thought you were done with me, but we're just beginning. Whoa, my life is a journey. I will walk with you, I will go where you want me to. Yes, I will go. Come on.
Wade in the water, we did. Wade in the water, children. Wade in the water. God said He's gonna jump in the water. Wade in the water, we did. Wade in the water, children. Wade in the water. God's gonna jump in the water. We are the sons and the daughters. We gotta stand up and make it loud. Just like our God told the Pharaoh to let my people go, go. We are a new generation from the ones who have come before. He's calling us into freedom. Let my people go, go. Wade in the water, we did. Wade in the water, children. Wade in the water. God said He's gonna jump in the water. Wade in the water, we did. Wade in the water, children. Wade in the water. God's gonna jump in the water. We are the sons and the daughters. We gotta stand up and make it loud. Just like our God told the Pharaoh to let my people go, go. We are a new generation from the ones who have come before. He's calling us into freedom. Let my people go, go. We're gonna shine on the shade. Give me a papa God where He make the heavens. If you don't say you know what trouble, let my people go, go. The blood, sweat, and the tears that we gathered through the years. If you don't say you know what trouble, let my people go, go. Wade in the water, we did. Wade in the water, children. Wade in the water. God said He's gonna jump in the water. Wade in the water, we did. Wade in the water, children. Wade in the water. God's gonna jump in the
Everything you put your hand go walk. Your name go open doors. You self go be a boss. Amen. Amen. Everything you put your hand go walk. Your name go open doors. You self go be a boss. Amen. Amen. Every hustler getting paid. Where the hustle go come the pay. Your own in no go take. Amen. If you don't find work, do your own. God self go do His own. And flesh go cover bone. Amen. Amen. If you believe it, say amen. If you believe it, say amen. If you believe it, say amen. 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 Everything you put your hand go on. Your name go open doors. You self go be a boss. Amen. Amen. Everything you put your hand go on. Your name go open doors. You self go be a boss. Amen. Amen. Sister, where one man receives until where they find begin. One day you go born twins. Amen. Amen. Then you see it no go take. If you believe it, say amen. No, amen, amen. Everything you put your hand go walk. Your name go open doors. You self go be a boss. Amen, amen. Everything you put your hand go walk. Your name go open doors. You self go be a boss. Amen, amen. Long life go follow you, strangers go favor you, great men go